Okay, if you don't have a high interest savings account, why not? They're literally a better version of a regular savings account. Now, savings accounts are pretty straightforward. You typically put money in them that you're saving for something, whether that's long-term savings like an emergency fund or short-term savings for a purchase that you know you're going to be making at some point. The thing is, they don't do anything for you. They literally just keep your money sitting there and waiting for you. Now, hopefully you're not paying fees or anything like that, but you're also not getting anything back. Now, the thing about money that you just have sitting there for extended periods of time is that it's losing its value. Prices are always going up at least a little bit because of inflation, so money that you aren't either spending or growing is actually getting less valuable. Now, the good news is that banks that you have your savings account with typically pay you back some interest for choosing them. It's like a little thank you for actually keeping your money with them instead of with someone else. The problem is that regular savings accounts, like the ones at the big banks, for example, they don't pay you very much interest. Depending on what's going on with the inflation rate at the time and the economy, it can literally be as low, we've seen this in the past, as 0.01%. And for some context on that, that means that if you had $5,000 in your savings account, you get 50 cents for the year. Obviously, that's not a lot of money, and it's definitely not beating inflation at all. Luckily, there are alternatives that offer higher interest rates, and they're called high interest savings accounts, which is obviously a very fitting name. Now, high interest savings accounts are savings accounts that earn above average interest rates on deposit, which means that your bank account balance can grow faster than they would if you had a traditional saving account. Now, we're actually in a very different place when it comes to interest rates than we were the last time we did a video like this, which was almost 2 years ago. Right now, interest rates are currently higher than they were in the past, and you can officially find multiple different high interest savings account options that do offer higher interest rates than the current inflation rate. Now, at the time that we're filming this video, the most recent inflation rate update was for January 2024, and we were sitting at 2.9% in Canada. Now, the first thing that we want to go over is what the traditional savings accounts rates are right now and see if they actually are higher or lower than the current inflation rate.
Now, I want to mention that the biggest reason that traditional banks have the lowest interest rates is because they're not really incentivized to raise them. People are going to bank with them no matter what, either because they've been doing that for years and don't want to switch it up, or maybe because they don't know their options, or because they like the idea of only using one bank, despite the fact that it's super easy and even more beneficial to switch it up now. So I want to walk you through all 5 of the big banks in Canada and show you the interest rates that they're currently offering right now. So first bank is TD Bank, and the high interest savings account that we're looking at is the TD Premium Savings Account. Obviously, TD has a whole bunch of other accounts. We're looking at this account in particular because this one has the highest interest rate. Now, I know that sounds kind of funny segueing into this because their current interest rate is actually 0%. However, it does go up to 1.85% if you have at least $10,000 in the account. They do not have a current promotion going on right now, so 0% unless you have $10,000. Now, another thing that we're going to be doing in the video is that we're going to be showing you how much you would earn if you kept $1,000 in the account for a year and if you kept $10,000 in the account for a year. Obviously, with this account, $0 unless you have $10,000. Another thing that I wanted to mention is that they do also charge anywhere from 50 cents to $1 for e-transfers. So the next bank is CIBC, and they have the CIBC E-Advantage savings account. Now, their interest rate on this account is 0.65%. However, it does go up to 1.5% if you hold at least $100,000 in the account, which is a little bit laughable, but yeah, they do have a current promotion going on right now for 5.75% for 4 months. In terms of earnings on the account, what we're doing is we're not going to show you the earnings including the promotion. It's just whatever the base rate is. So on this account, if you held $1,000, it would be $6.50. If you held $10,000, it would be $65. And I do also want to mention that with this account, they do charge $1.50 for e-transfers. The next bank is Scotiabank, and they have the Scotiabank Momentum Plus savings account. Now, the interest rate on this one is 1.30%. They do also have a current promotion going on, and it's 3.4% welcome bonus, an interest rate for 3 months. It could be up to 5.6%. If you held $1,000 in this account, you'd earn $13. $10,000 would be $130, and they actually charge $2 for e-transfers. The next bank is BMO, Bank of Montreal, and so they have the BMO Savings Amplifier account, and their interest rate is 1.9%. What you'll notice is that this interest rate is actually the highest of the big 5 banks, which is interesting. But they do also have a current promotion going on for 5.5%, and that expires on May 31st. We will give additional details if anything on the screen. But yeah, if you had $1,000, you'd earn $19. If you had $10,000, you'd earn $190. And yeah, they charge $1 for e-transfers. Now, the next bank, the final bank, is RBC. And RBC has the RBC High Interest E-Savings account. And they have an interest rate of 1.7%. Current promotion as well for 5.5%, similar to BMO, and that is for 3 months, and it expires in April. We'll give additional details as usual. But if you had $1,000, you would earn $17. If you had $10,000, you would earn $170, and they also charge $1 for e-transfers. Now keep in mind that all of these rates are between 0 to 1.9% with a few short-term promos. Again, these are some of the highest rates that we've seen over the last 5 years from the big banks, and once again, they are subject to change and will likely go down over time. So that's just something to keep in mind. Also, remember that all these rates are still lower than the current inflation rate at 2.9% that we have right now. Now, there are other truly high interest rate accounts that are out there that have higher interest rates right now.
Okay, now I want to take you through a bunch of the other non-Big Five bank high interest savings account options that are out there. I'm going to be covering the platform, what type of financial institution it is, what the current interest rate is, if they have any promotions right now, and then also all the other account features too. Also, keep in mind that what you should be looking out for when it comes to these accounts is, first off, is your money within the account protected? Now in Canada, we have the Canada Deposit Insurance Corporation, or CDIC. They protect up to $100,000 per savings account per financial institution. The key is that you have to make sure that the financial institution that you're using is actually a member. You can look out for this symbol. It'll be on their website or the platform. And if it's not on there, then they potentially aren't insured by them. So that's definitely something to keep in mind. The other things that you want to look out for is that there's no minimum balance required and no monthly fees. Of course, we're definitely looking for no fee accounts here. So with all of those different things in mind, let's actually look through and run through all of the different options. Okay, so we've compiled everything. That's why I'm looking at my laptop here. But the first option I want to talk about is EQ Bank. You guys have heard us talk about EQ Bank a bunch of times. It's where we both have our high interest savings accounts right now, and actually we have for the past few years. They are a digital They're a digital banking platform, but they're associated with Equitable Bank, which is a big bank that's been around in Canada for a long, long time. So that's who they're backed by or powered by. And EQ is specifically their digital facing part of the bank. Now, their high interest savings account specifically is called the personal account. This is new. It used to be the Savings Plus, but now it's the EQ Bank personal account. The current interest rate is 2.5%. They do have a promotion. This is kind of an interesting one. It's 4% for 12 consecutive months, as long as you're doing a direct deposit into your account. I think there's specific rules. We'll have it up on screen or linked down below for how that works. But again, 2.5% is the regular, 4% for 12 consecutive months. They've consistently had high competitive rates. That's why we've been using them for, I think, over 3 years now, 3 or 4 years specifically with EQ specifically. Double specifically, but that's what they have set up currently as of the time we're filming this. Also, to cover how much that would mean you would have if you had $1,000 in your high interest savings account, after 1 year with this rate, you'd have $25, not including the promotion. And if you had $10,000 in your account, more like a fully funded emergency fund, you'd have $250. In terms of the account features, they do have the $0 monthly fee. They have no minimum balance. They are CDIC insured, and they also have free e-transfers too. The other thing to mention with the EQ Bank personal account specifically is that it's like a hybrid account. They say that you can use it for your high interest savings and as a checking account, so it also comes with the EQ Bank card. That's new as of last year, but something to note as well. Next up is Neo Financial. They're another digital banking platform, and their high interest savings account specifically is called the Neo High Interest Savings Account. Very fitting name. I think we'll see that as a recurring theme. They currently have an interest rate of 4%, no current promotion, just a simple 4% right now. Again, that would mean that if you had $1,000, you would make $40 in a year, and if you had $10,000, you'd make $400 in the year. You've also heard us talk about Neo before too, because I use their cashback credit card, so we are a fan of this platform. Again, $0 monthly fee for this account, no minimum balance. They're also CDIC insured as well. Next up is Wealthsimple, another platform we've heard us talk about before because we use their investment products. In this case, they're also another digital banking platform.
This account is called the Wealthsimple Cash Account. Again, it's a hybrid account for them too, checking, savings, all of that, but it is their high interest savings account version. They also have an interest rate of 4% right now. You'll see a recurring theme. That's one of the highest percents out there. I consider this a current promotion. Technically, you can get up to 4.5% if you have $100,000 in the account and 5% interest if you have $500,000 in your account. That's a lot of money to keep in a savings account and not have invested. So I consider it more of a promotion. The standard, if you have less than $100,000, is 4%. Again, that means that if you had $1,000 in your account, you'd earn $40 in a year. If you had $10,000, you'd earn $400. They also have a $0 monthly fee, no minimum balance, and are CDIC insured. I do want to mention this, and similar to the NEO one that was just before this as well, is that how they are CDIC insured is that your money kept within the savings account is actually kept with banks that are CDIC member institutions, even though NEO and Wealthsimple aren't. So your money is still insured that way. The Wealthsimple Cash account as well also comes with a Wealthsimple Cash card. So similar to the EQ Bank one I mentioned before, it's a hybrid account that has that as well. Next up is Simply Financial. Now another digital banking platform, but this one's associated with CIBC, which is one of those big 5 banks in Canada that Dennis was talking about before. They have the Simply High Interest Savings Account. That's what it's called. Their current interest rate is only 0.4%. Again, they have higher interest rates if you go above $100,000 sitting in your account, but I would consider that a minimum balance and a lot of money to keep in your savings account. So 0.4%. They do have the highest current promotion going on right now. We're going to talk more about if you should take advantage of these or not in a second, but they're offering 6% for 5 consecutive months ending on April 30th, 2024. So I believe as long as you sign up before April 30th, you would get those 5 months at 6%, and then it would switch back to the 0.4%. That means that on $1,000 in 1 year, you would only earn $4. Again, this is for the actual rate, not just the short-term promotion, because that is short-term. And then on $10,000, you would make $40. They do have a $0 monthly fee, no minimum balance, and are CDIC insured, which is all great. Next up is Tangerine, which is very similar to Simply Financial. Tangerine is another digital banking platform associated with Scotiabank, another one of the big 5 banks. They have the Tangerine Savings Account. That's what it's called. Pretty simple. They're offering a 0.7% interest rate right now with no current promotion. I know they have promotions for their TFSAs and RRSPs, but for their saving account specifically, nothing, just 0.7%, which is obviously fairly low. Again, on $1,000, you would only make $7 in a year, and if you had $10,000 in your account, you would make $70 for the year. They do have the $0 monthly fee, no minimum balance, and are CDIC insured though, which is all good. The next option is Koho. They're another digital banking platform, and they have the Koho High Interest Savings Account. Now, their interest rate is 3% for their free plan. They do have paid monthly plans that brings it up to 5%. I believe they have different tiers that you have to pay for. Again, we would consider that having a fee though. So for their no monthly fee, no minimum balance, all of that account, it's 3% interest right now with no current promotion. That would mean that on $1,000, you would make $30 in a year, and with $10,000 in your account, you would make $300. Again, like I just said, $0 monthly fee, no minimum balance, and they are CDIC insured. The next one is Oaken Financial. Now, Oaken Financial is again another digital banking platform. They are associated with the Home Bank and powered by Home Trust Company. So similar to some of the ones we talked about before, they are powered by these bigger banks in the background. They have the Oaken Financial Savings Account. They're currently offering 3.4% interest with no current promotion. On $1,000, that means you would make $34 for the year, and if you had $10,000 in your account, you would have $340. They again also have all of our criteria of a $0 monthly fee, no minimum balance, and they are CDIC insured as well. The next one is Laurentian Bank. Now, I wanted to mention this, that Laurentian's not a digital bank. It's actually a second-tier bank in Canada. Basically, it's like a level below our biggest banks that we have. And again, they have the Laurentian Bank High Interest Savings Account, classic name that we keep seeing. They also have an interest rate of 3% right now. It does go up to 4% if you have $100,000 or more in your account, similar to some of the other ones I've talked about before. But again, 3% is their interest rate if you don't want to pay any money or keep a lot of money in your account. They don't have any current promotions. So again, this means that if you had $1,000 in your account, you would make $30 after a year. And if you had $10,000 in your account, you would make $300 after the year. They do again have the $0 monthly fee for this, no minimum balance, and they again are CDIC insured. I did want to mention that they do make you pay for e-transfers. You're going to see a bit of a theme coming up with that. It's $1 per Interact e-transfer transaction. So that's Laurentian Bank. The next one is Motive Financial, back to another digital banking platform. They're associated with Canadian Western Bank, and their account is called the Motive Savvy Savings Account. I like that they're a little more creative with their name. Their interest rate's actually the highest one we've seen so far at the moment. They're sitting at 4.1%. No current promotion, just that higher interest rate, which is awesome. In 1 year, you would have $41 if you had $1,000 in your savings account. If you had $10,000, it means you would have $410 at the end of the year. They also have the classic $0 monthly fee, no minimum balance, and they are CDIC insured. One thing to look out for here is you again do have to pay for e-transfers if you were transferring out of your saving account. It's another $1 fee per e-transfer. They also have a monthly withdrawal limit of 2 per month. Next up is Alterna Bank. Alterna is a digital credit union platform, so similar to a digital banking platform, but they are actually associated with the Alterna Savings Credit Union, so not a bank, a credit union instead. We're going to talk more about these. That's what we have coming up. They have the high interest e-savings account. That's what they call it. They're offering 2.25% interest right now, so not the most competitive one. No current promotion. In $1,000, you'd make $22.50. On $10,000, you'd make $225. But again, they have $0 monthly fee, no minimum balance, and they are CDIC insured. Again, they're a federal credit union. Federal credit unions do have CDIC insurance. We're about to get into some provincial ones, though. The first one is Savin Financial. Again, they're a credit union. They have the Savin Financial high interest savings account. They're offering 4.15% interest right now. Again, the highest rate that we've seen, a little higher than the other one at 4.1. No current promotion, so just the 4.15% interest flat. That means that in $1,000, you would make $41.50. And if you had $10,000 saved in this account, you would make $415 in 1 year. They again have $0 monthly fee and no minimum balance. Now, they're not CDIC insured because this is a provincial credit union. What that means is that they're actually protected by their different provincial bodies instead. It's different depending on what province you're in. We'll throw up an example on screen of the Ontario one because that's where we're located. It's the Financial Services Regulatory Authority. So the FSRA that covers Ontario, but it's different and there's different rules depending on what province you're in. So make sure you look into your specific province. Okay, now we're wrapping up with a few more credit unions. There's the First Ontario Credit Union, which is of course a credit union. They have a high interest e-savings account as well. They're offering 1.75% interest right now, which is much lower. It goes up to 1.8% if you have $100,000 or more. Again, that's a minimum balance for not very much more interest. No current promotions, so if you open this account and had $1,000 in it, you'd make $17.50. If you had $10,000, you'd make $175 for the year. Again, $0 monthly fee, no minimum balance, and they're not CDIC insured because they're a provincial credit union, but they do have that provincial coverage instead. The last two is the Meridian Credit Union. Again, a credit union. They have their Meridian High Interest Savings Account. Their current rate is 2.25% with no current promotion. If you had $1,000 in the account, you'd have $22.50 after a year. If you had $10,000, you'd have $225 again. No minimum balance, no monthly fee, a $0 monthly fee, and again, no CDIC insurance, but they have that provincial credit union insurance instead. Now, the very last one is the Desjardins Credit Union. We had some comments last time wanting us to include Desjardins, so I think that they're a popular one. They have the Desjardins savings account. Their current interest rate is only 1.7% right now, which is definitely not the most competitive even amongst the credit unions. They did just have a current promotion though that I believe ended on March 7th for 5%. So potentially they'll have more promotions again coming up in the future, something to keep an eye out for. But with their 1.7%, that's only $17 if you had $1,000 in your account for 1 year. And if you had $10,000 in your savings account, you would make $170. They again have the $0 monthly fee, no minimum balance, not CDIC insured, but they have that provincial credit union coverage instead. So again, make sure you look into it depending on the province that you're in. Now, that's it for all of the different non-Big Five bank high interest savings account options out there. As you can see, there's a ton of them. We have a little bit more to talk to you about before we wrap up though.
Okay, so now that you have all that information, you might be wondering whether it's actually worth it to take advantage of some of the short-term promos. Like, for example, some of the highest interest rates that we were seeing were around 4%, but then you have banks like Simply who have a promotion for around 6% for 5 months, but then that drops back down to 0.4% after the 5 months. Let's actually do the math real quick. If you had $10,000 in your high interest savings account at a 4% interest rate, you would have $400 in 12 months. Now, if you have $10,000 in your high interest savings account at a 6% rate, but for 5 months, you would earn $250. Now, if you stuck with that same account and the interest rate went back down to the standard rate, so 0.4%, you would only earn $23 for the remaining 7 months out of the year. So that's $400 with account number 1 and $273 with account number 2, despite them having that really high promotion. So when you actually look into it, it's only really worth taking advantage of the promotion if after the promotion ends, you're actually gonna move the money or switch to a higher earning interest account after the promotion period's over. There's definitely people who do that, but if you know you're capable of being on top of things and actually making the switch, then that's definitely an option for you. There's no major downside to having multiple accounts open and switching from one account to another, as long as you're making sure that the account that you do have doesn't have any minimum balances, requirements, or any fees, because you really don't want to be eating into your extra few $100s of earnings that you just had. Okay, so we hope that you guys found this helpful. If you are looking to sign up for either EQ Bank's, Wealthsimple, Neo Financial, or Simply Financial's high interest savings accounts, we do have their links down in the description box below, so make sure you check those out. And yeah, we hope that you guys have a good day, and we'll see you next week.